This public hearing of the House Standing Committee on Tax and Revenue for the inquiry into housing affordability and supply in Australia. In accordance with the committee's resolution, 25th July 2019, the audio of this hearing will be broadcast on the parliamentary website, and the proof and official transcripts of the proceedings will be published on the Parliament's website. Ladies and gentlemen, the engagement for this panel will be pretty simple. It will end at 2:15 on the dot. I'm going to allow each of you 5 minutes for an introductory statement. I will cut you off at 5 minutes. If you want to give less than a 5-minute opening statement, that would be gratefully welcome. I have a series of questions that have been given to me by Cameron Murray, which I will be asking you. The shorter the answer you can give, the more grateful the chair will be. And then I will open it to other committee members, alternating between parties, and that will end at 2:15, even if you're in the middle of an answer or someone is in the middle of answering a question. So I'd now like to welcome the following witnesses to give evidence today. So I have Mr. Lee Warner from JLL Group, Mr. Toby Long from Mirvac, Mr. Andrew Helmers, yes, and Mr. Brett Lavering from MJH Group. For Hansard record, would you please state your name and the capacity in which you are appearing before the committee?
Myself, Andrew Barron Helmers, I'm the CEO of the MJH Group.
Okay, so Brett, I would suggest that you might have two devices open, so if you could mute yourself, that would be helpful. Thank you. Could I ask Mr. Warner to introduce himself for the purposes of Hansard?
Mr. Warner online yet. We're following up.
Thank you. Mr. Long, could you please introduce yourself for Hansard Records?
Yes, my name's Toby Long. I'm representing Mirvac, the General Manager of Residential Development for Mirvac in New South Wales.
Mr. Helmers, could you please state your name and the capacity in which you appear?
Andrew Helmers, here for the MJH Group CEO.
Mr. Lavering, could you please state your name and the capacity in which you appear?
Brett Lavering for the MJH Group, Head of Corporate Affairs.
Thank you very much. This hearing is a legal proceeding of the Parliament giving false misleading evidence a serious matter and may be regarded as a contempt of Parliament. The evidence given today will be recorded by Hansard and attracts parliamentary privilege. It is important to note that although your evidence is protected by parliamentary privilege, this protection cannot be enforced outside Australia. I now invite you to make an opening statement before we proceed to discussion. Mr. Warner is still not here, I take it, Claire?
No.
Thank you. Mr. Long, would you like to give an opening statement?
Sure, and I'll be brief. My name's Toby Long and I'm representing Mirvac, as I've already said. We're one of Australia's leading and most respected developers. We are a listed company and have been delivering a diverse range of new homes across the country for almost 50 years. Our 50 years comes up next year. And we've a strong commitment to quality, good design and community creation. So I've been with Mirvac for 24 years, and in that time, I've never seen a project where getting it to market as quickly as possible is not the paramount driver. We don't have land banks. All our projects are in the process of being either rezoned, getting DA approved, or pushing hard to deliver facilitating infrastructure to allow us to sell and settle as quickly as possible. The driver for us is recycling our capital and delivering homes to the market as efficiently as possible. Rezonings in New South Wales are now taking in excess of 7 years, but this does not mean we can start after the rezoning. We've got development approvals for the civil works, a further 18 months to 2 years. Then there is the construction of the roads, servicing and infrastructure, another 6 to 9 months. Then there is the building of the house, which can take between 9 to 12 months. So adding it up means that it's more than 10 years to hand over the keys to a home buyer. And so over many years, we've provided recommendations to governments around the country to help expedite the release of a diverse range of new housing types to the market to meet growing demand and help make housing more accessible to more Australians. I'd like to note that the Productivity Commission for New South Wales did extensive work around housing the people of New South Wales. and I'd highly recommend and encourage reviewing his findings and recommendations. And that's all I have, Chair.
Thank you very much. Mr. Helmers, would you like to make a brief opening statement?
Yeah, it will be very brief. Thank you. Andrew Helmers, MJH Group. We're the third largest builder of single residential houses in the country, operating in 4 states across the eastern seaboard, completing about 4,500 houses a year. We believe the biggest challenge to housing affordability is land supply, land supply, and land supply. I don't know of any land developers who aren't trying vigorously to bring every piece of land in their bank to market as quickly as they can, to get it out there to the buyers in what has been a boom market for a couple of months or a couple of years now. To put into context, in 2017, we purchased 450 square metre blocks in a suburb called Box Hill in New South Wales. They cost us $550,000. 4 years later, that same block of land got sold this weekend for $1.2 million. 120% increase by anyone's guess in a period of 4 years. Our house prices over that same period, a typical house built on that block, has increased from $264,000 to $351,000, about $87,000 increase, 32% over that same period. The biggest challenge to housing affordability is land supply, land supply, and land supply. And it's the same in every state. That's the end of my statement. Thank you.
Thank you very much, Andrew. Richard, who are you here appearing before?
Thanks, Chair. Richard Ruddick, General Manager for Stockland Residential Communities. So appearing on behalf of Stockland. So
Thank you. Would you like to make a very short opening statement?
I would, and similar to what Toby and Andrew have said, I echo a lot of the things that were said. But just in context of Stockland, Stockland's a top 50 ASX listed company. We have a market capitalisation of 11 billion at this point in time. We've been operating in Australia for over 70 years. We're the largest diversified property group in Australia, and we also are the largest developer of residential land in Australia. We provide housing right across Australia with key focus in the eastern seaboard and Perth in Western Australia. We sell more than half of our product to first homeowners, and typically 80 to 90% of our product is sold to owner occupiers. Picking up on what Andrew spoke about in terms of land supply, that is critical. There are a lot of factors that actually read into affordability and the magic pie that we all look at, and that comes down to land acquisition costs, development contributions, scale of development, approvals and timeframe to get those approvals, infrastructure, timing and delivery. But coming back to, again, supply and availability is absolutely crucial. And I've got some good examples of that I'd like to share with you at some point if I can, Chair.
Look, that would be great. Can I ask you to share that now? Because I want to go straight into questions. They'll be short and sharp. And as I said earlier, we are finishing on the dot at 2:15. So please, 2-3 minutes, share them with us.
Yeah, thanks, Chair. So when I was looking at this across our portfolio, I wanted to compare the 2 big cities being Melbourne and Sydney. So Melbourne population, Sydney population, roughly the same population of about 5 million people. In terms of just looking at land supply, 32,000 will be delivered this year in Melbourne or Greater Melbourne, and also in Greater Sydney it's 13,300. So the level of supply is quite different. When we actually look at what we're selling those prices for, in Melbourne, we're selling completed lots at about 900 to 1,000 a square metre. In Sydney, we're selling equivalent lots at 1,800 to 2,000 plus and rising. And the example in Box Hill, that's probably getting up to 2,500 a square metre. So our business is going to settle close to 3,000 lots this year in Melbourne. We're going to settle just over 1,000 lots here in New South Wales. And that's because of a supply. Our business wants to be overweight in New South Wales, but we can't find the land to buy and deliver like we can in Melbourne. The reason we can find it in Melbourne is the Victorian planning Authority basically has a PSP process. They're dedicated on delivering land. They're focused on that because it's an economic driver, whereas it's not the same, it's not held in the same regard here in New South Wales. And that's why pricing is so acute, and it is an issue here, particularly in New South Wales, but it's an issue in Queensland, it's an issue in Western Australia, but the state that does it best is Victoria. When I look at the underlying, what we actually purchase land for, in Sydney, it's costing me now $4 to $5 million for unimproved land to go and buy that. In Victoria, that's at 1.5 to 1.7 million. So that puts a floor under what you can actually sell stuff to in the market, and it's extremely high to purchase because we're developers. We don't hang on to what we do. We buy it and we basically bring it to market and we sell it. And when you're buying it at $5 million a hectare, that means you can't sell it for less than what you're buying it for, otherwise you're not viable. So it's a really key factor, and that's why I wanted to give that comparison between a state that is actually supplying compared to one that basically where there's a supply constriction, and reading through a city at the same size. Thank you, Chair.
Thank you. I understand that Mr. Warner has now joined us. Is that the case? If it's not, I will go to questions. Okay, I'm going to this question goes for everyone. I'd like an answer from everyone. I have 8 questions and that's it. Then I will hand over to the Deputy Chair. If a new competitor established themselves besides your major residential projects and sold similar dwellings for 25% less than what you sell them for, would that be a good or bad thing for your business financially?
From our
Why
building,
don't we start, Mr. Long? Good or bad?
An interesting question, and in my experience, it'd be pretty surprising to see a competitor next to me selling at 25% less. In the Sydney market, if they were to buy something that they could make viable, 25% less, I'd be.
But if they did, let's say there's someone crazy enough out there to do that, would it be a good or a bad thing for your business?
I think it'd be like anything. It'd be a great competitor to have next to you.
So bad?
And it'd just be another competitor.
Okay. Mr. Helmers?
no, it would be significantly bad. There's no doubt.
Okay. Thank you. And anyone else, please?
I was just going to say we take a long-term view on our projects, and people come in and out of the market at lower points and higher points in the market. For someone like at Stockholm, we take a longer-term view and make sure we're providing consistency to our customers. So we take a view. People do what they do in the market, but we take a view of providing certainty and a long-term vision for our customers.
Okay. So I'm going to stick with you, Richard. But is it not your argument, or at least that of many property lobby groups, that rezoning will lead to lower housing prices and the mechanism will be through more competition from cheaper competitors?
Well, the price increases we've seen at the moment isn't good for anyone. But coming back to the example that I provided before, is that what happens when you've got more availability of land, it actually suppresses price. It doesn't let price run out of control. And that's evidence exactly the same size of cities, same immigration, same economic drivers. Basically, when you look at those two things, what's actually helping the land supply and market down there is a systematic approach to actually providing available land, and it's affordable land. Whereas here again in New South Wales, when I'm looking at different things, they don't have that same approach. There's not availability, and it's driving up the price of land. So when I, as a developer, go to actually buy it, I have to spend a lot of money buying it in New South Wales relative to Victoria. And so that actually pushes up the price of what you can actually provide to the end user.
I get it. Mr. Helmets, is it not that your view that if we increase the amount of supply, that prices will go down?
I don't think that's.
Sorry, Mr. Helmets.
I don't think that's the case. Like Richard, I think what we would expect to see is that prices will not grow, and we're a volume house builder across the country. We're looking for more and more numbers. Price growth in land and how and impacts on affordability are counterintuitive to what our goal is, and that's to build more houses. If we can increase supply through planning, we won't see prices, double in 4 years. That's what we want to.
Sorry to cut you off, Mr. Hellmans. Mr. Long, your view?
Yeah, my view is consistent with both with Richard, in that rezonings won't necessarily lead to lower housing prices because we've got an undersupply issue in New South Wales, but it will actually help in terms of making sure that will be moderating the rise of prices into the future.
So it'll keep prices down. It'll keep price increases down.
Moderate.
Yeah.
Yep.
Okay.
And
Mr.
hence-
Warner, could you
hence-
introduce yourself, please, for the purposes of Hansard? Your name and capacity in which you appear.
Yes, sorry, apologies for that.
Sorry.
Warner, I head up residential research at JLL. So we're a property services company. We're involved in the valuation.
Thank you, Mr. Warner. Thank you, Mr. Warner. Okay, so can I start then with you, Mr. Long? Why do you target such small rates of housing completion?
Is that me, Chair?
Yes, Mr. Long, yeah.
I'm not really sure what the question means, but we don't have completion targets. We're trying to recycle our capital.
Mr. Long, okay, Mr. Hellmans, why do you target such small rates of housing completion?
I don't believe we do. I'm not sure of the question.
Okay.
Yeah.
And Richard?
We don't. We provide the highest number of house sites in Australia, deliver over 6,000 to 7,000 per annum. We'd deliver more if we could get rezonings, DAs and access to land.
Okay, so on that point, would you sell faster if you had an inactive project rezoned?
Yes, we would, because you need the rezoning to actually bring on supply. We've had a number of instances where developments can take anywhere from 5 to 10 years to get rezoned. Then you need a year for development approval. You then have to go through, get your construction certificates, and then we can actually develop it in 6 to 9 months, depending on which state you're in. So we're actually quite efficient. It's the process before you get to that, which is actually what's holding back supply. And when you're actually looking at, demand can happen overnight with, changes in interest rates and FOMO that leads it. To actually bring supply to market, it takes a long period of time. So there's a mismatch when those two things happen.
Okay, Mr. Hellmans, would you like to add to that answer?
I concur with Richard wholeheartedly. It's just a supply side issue. Demand is stable in this country, and the reason we've seen such huge price increases in land and housing over recent months is just because the demand outstrips supply. It's a simple economics 101.
Okay, and Richard?
I gave one, Chair, but if I can add a little bit to it.
Oh, yeah, sorry, I'm going the other way. Yep, but go, Richard. Thank you.
And I'll add one.
Part of the chair.
I just wanted to put the customer lens on that. The last release we had at one of our projects here in Sydney, we had 1,200 requests for an appointment in 1 minute from our database without any marketing for 30 lots. We're now out of market for the next 3 months because we don't have any DAs in place. So we would definitely sell more if we could.
All right, Mr. Long?
I'd echo what Richard has said, and I'll give you a couple of examples. We got a DA, and this is after we've got our rezoning, so it's taken us 5 years to get a rezoning. We got a DA in the beginning of November. We went to market in December. We had 4,800 in our database. Of those, 1,200 nominated for a 30-lot release. So exactly the same as what Richard has emphasised. If we had more active rezoned projects, we would be selling faster.
Mr. Warner, I understand that you're a property management company, but do you have anything to add to those answers?
No, I'd concur with the general sentiment of what the guys have been saying. I think certainly, the big problem is that demand side incentives keep pushing demand and prices, but the supply mismatches is what is causing a lot of our problems across the country long term. So
it's funny you say that, Mr. Warner, because after 4 weeks of hearings, that's pretty much the first thing we were told. My last question to you, and then I will pass to the Deputy Chair. And Mr. Warner, I might start with you. is, do you think that rezoning in Australia would lead to dwelling prices would lower dwelling prices by more than 20% than they are now if we rezoned more areas and more land?
Sorry, I beg your pardon. Can you repeat that?
My question is, do you think if state and local governments rezoned more land to allow greater supply, that you could see dwelling prices drop by 20%?
No. Straight out, I concur with some of the comments before. I think it's not going to create that much of a difference. It'll suppress growth in prices, but I can't see of itself causing a drop in prices because there's too many other variables that come into the supply-demand balance. And no, is simply.
If no one else wants to add to that answer, I'll pass to the Deputy Chair. Yes, Richard.
I was just going to add, thank you, Chair, that it'll moderate price growth. It won't certainly drop it by 20%. The challenge is the vendors who we buy for, the land, their expectation is set by what the market conditions and revenue is at the time and what the previous Englobo sales are. If there's a large lot of rezoning, there might be a bit of a reset, but you're not going to see 20% falls. You'll see moderation.
Thank you, Julie. Thank you.
Thank you. Thank you for your introduction and your evidence. Can I ask about the costs that don't actually add to a value of a property? And by that, I mean things like the length of time you have to sit on a piece of land waiting for rezoning, double handling of environmental things, uncertainty, councils haven't done their planning, not knowing what your contributions will be. Can I talk about all those things and whether there are ways to reduce the costs of the final house without actually, yeah, I think you know what I'm saying.
Andrew Hilmers, I'll go first from a builder's perspective. 20 years ago, it used to take us 4 weeks to get an approval to build a home, not a nuclear power plant, just a home. It takes us close to 9 months in some areas. The average would be closer to 6 to get an approval to build a home now. There are hurdles and approvals required from state governments and local councils and developers that add to the time frame, which hinders us in bringing stuff to construction start and adds to our costs. There's no doubt about it. You know, that it hasn't made the delivery of homes better. It's made it longer and more complicated. And as such, the impact on our buyers is quite considerable. They're paying rent for twice as long, 3 times as long, or paying mortgage whilst they're building a home. It's significant. There would be ways of cutting that red tape, cutting that approval time. We're building houses. We're not building nuclear power plants. And why it takes me 6 months in some councils to get an approval, I'm flabbergasted.
Any of the other witnesses have anything to add?
Thanks, Deputy Chair. I'd just like to build on what Andrew talked about with approvals. In the development side of the business, we operate, it's well known in the industry, on time, revenue and cost are key drivers, and time comes back to that approval element. So if it takes an elongated period of time to get an approval, you've got holding costs, interest costs, rates, taxes, and during that period of time, you get further uncertainty through policy change, which can impact how much you can bring a block of land to market. So speed and certainty are really critical measures for us in terms of getting to market and being able to provide something affordability where it takes a long period of time, and you get laden with greater increases with contribution charges and all the rest of it, then the cost of that goes up.
There was some evidence earlier on that it might be a better system if when you actually bought the land, it was actually all done. You knew exactly what was going on, and I asked that in 2 ways. Could that possibly work? And how much is the risk that you take built into the price?
Yeah.
Yeah. You're taking risks that aren't normal. You're taking risks and you're buying land. It might take 5 years to rezone. It might take 10. You don't really know. And then there might be environment. There's a whole stack of unknowns. The certainty is not there when you decide initially to buy a piece of land.
The Yeah, and when you're looking at it, certainly from a development perspective, it's a bit different to selling bread at a supermarket. The margin that you're probably looking on a loaf of bread is quite different to what you're looking at in terms of the land that you're going to bring to market. So that risk level means that you need to get a return that's somewhere in the order of 12 to 15% as a minimum baseline, which basically sets what you actually need to bring that to market. When it gets delayed from timing and interest costs and all the rest of it, that starts eating into in terms of your profitability. And you need a viable business. And the key part for us is you need to trade and trade quickly. Otherwise, your rate of return, we're an internal rate of return business. And the longer periods of time that we actually take to deliver product means our internal rate of return is less, and our shareholders don't reward us for that because we're a publicly listed company. So our whole thing is about speed, trying to get it to market. And when you have approvals, or you even get approvals that are not commercially viable, we've got a situation in North Sydney where we have an approval that requires you to, on any lot less than 450 square metres, to get an integrated housing DA, which takes Andrew 6 months to get an approval for. That's why I can't sell anything at the Gables, because I've got another layer of approvals to try and do it. So I'd love to do it. I just can't. I've got to activate these approvals.
Yeah.
It's a good question, Deputy Chair. I think the other thing is we as an industry, we understand risk, and we understand market risk, and we understand construction risk, and we bed those in. What we can't control is planning risk, because it's out of our control. And that is the thing that impacts all of us the most, is actually having time taken away from us. I'll give you an example where in Sydney, we have a site where the government actually said, we will rezone this at the end of 2014. We, as appropriate developers, went into that area and said, okay, we'll option up some of the land there to be ready to deliver what the government wants, housing for people in New South Wales. We are now in 2021 and that area has not been rezoned. We have had to take up our options in that area, and it's been quite difficult to get any kind of engagement for all sorts of planning reasons. So to give you an example, we take on risk, but certainty and working through those elements that we can't control would be much better up front.
I have two more, Chair, if I'm allowed to do that. In terms of, again, the value of a property, there are three things that, from my perspective, that add to what the property is actually worth, not what people pay for it, but its actual value. The land location, the amenity around it, and the house itself. So what I'm looking at is that then there's this other range of costs that seem to be in there that don't actually contribute anything at all. So what I'm trying to do is trying to figure out how, if anyone does it well, to reduce all that other stuff, which is cost, but it actually doesn't really contribute to the value of the property, just its price. Does anyone do it well? Victoria, you tell me sell land at a lesser value. I assume because they see that as is that the taxpayer gets a return from selling that land through another mechanism other than its price. But does anyone else do it well? Is there anyone even trying to reduce all that cost aspect, non-productive cost?
Yeah, I'll jump in there. One of the local authorities in Queensland that did it well, and I'm just trying to remember the name of it, is Logan City Council. They basically were able to take some things off local councils and move it to self-certification through engineers. There's obviously an audit process related to that, but that would take an approval process to get a sub-cert construction certificate from 2 to 3 months down to a couple of days. So it was able to take what is, and one of the things I meant to talk about before was that in a hot market, there's competing demand for resources in what we do in local councils, and a lot of councils are understaffed trying to keep up with the demand of the industry at the moment, and they have to prioritise, key applications and stuff rather than being able to deal with all of them. So again, that becomes an impact on supply. But what Logan City Council, they realised that, and they were able to then implement. I just wish I could remember the name of it. I'll be able to dig it out and send it to you guys. But there were a number of things that they looked at and they were able to fast track and take multiple months out of the DA process. In Queensland, under the Integrated Planning Act, there's actually legal recourse for rezonings. We don't have that here in New South Wales. We do for a development application, we don't have a rezoning. So there's a lot more accountability in the rezoning process in Queensland. And the Victorian system does it well in terms of the PSP rollout of land and supply. So there are some really good examples in different parts of authorities. It's just probably trying to bring all those collectively together to go, if we want to increase productivity, that can, get rid of those holding costs of interest and give up the industry more certainty. You don't have to price in risk. You don't have to, pay those interest costs so you can get on it and deliver it. But it's silly to think what Toby said before. Here in New South Wales, it can take you 5 to 10 years to get a rezoning, and you're talking anywhere then 7 to 11 years to basically deliver a block of land from start to finish.
Mm.
So.
Thank you. We're also hearing from people that when supply does increase, it also increases your costs because of labour shortages, supply chain problems, etc., and the increasing time for the authorities to process things because they get overwhelmed. So again, the evidence is also that if you increase supply and you don't do it well, you do increase cost as well. Is that right?
I think the relativity of the value is such a small part of it, Julie, that Deputy Chair, that it is, but it's such a minute part of it. Maybe just emphasising your comment before, and it is the Queensland, I think it's called SARS, actually, Richard, the system they have up there, where they do have a great way of bringing the different groups together to give you an approval very quickly, which doesn't seem to happen here. There does seem to be a lot of double handling in New South Wales.
So, okay, no, thank you for that answer. That's okay. So that the additional costs of supply chains and labour are such a minor part of the cost relative to all those other costs. That's what you're telling me? So does that mean that if the federal government,
Julie, I might make this your last question if that's okay.
If the federal government started to invest in affordable housing and there was a massive build, across the nation in that, or the military started doing major builds, that started to suck up the labour, that wouldn't have a major impact on price?
It certainly have an impact on price. It wouldn't slow down the supply though. Andrew, you might be.
Yeah, those sort of schemes are problematic, and the timing of them is, causes some ructions. If the government, any level of government, was coming out now with a substantial public housing scheme program, the industry would not be able to, the housing construction industry, the construction side would not be able to keep up. The construction industry, the suppliers, the labour, it's at breaking point at the moment, and will be so for some, 12 months or 18 months moving forward. The difficulty that I find in this whole debate is that state and federal governments use our industry to stimulate the economy. They're just not stimulating supply at the same rate, at the same time. They're out of whack. I don't know of a land developer across the country that wouldn't have every single block that they own on the market today if they could. And to Richard's point and to Mr. Long's point, they just can't. We're not a very large developer at all, not in the same sort of scale, but we've got several projects that we've had for 4 or 5 years. We will miss this boom because I still can't bring them to market. And it's not because I don't want to, it's because I just can't. And that, rezoning, supply will keep we can't look, I don't think there's any threat that we're going to see prices of housing stock fall. Demand is still there, will always be there. It's not a demand issue, it's a supply issue. And if we have any hope for our children and our children's children to be able to get into the property market, we need to fix supply.
Okay, I'm not allowed to have any more. Thanks.
I think we might come back to you, Deputy Chair. But Terry, do you have any questions?
Thank you very much. Thank you for your time, gents. I've just got a couple of questions. So if land was made more readily available to you, so it was released quicker by governments, what would stop developers then drip feeding supply? and then keeping the prices up. I'm just wondering why a business, particularly publicly listed businesses, want to reduce the price and therefore the profit they'd be making to shareholders.
I'm not a property developer, so I'll speak first. Competition. The market will fix it.
Yeah. Thanks, Terry. I was going to say the same thing. Is when we go to buy the land, we're in a competitive market process with the likes of Toby, and we go in there and we generally go in to meet our minimum returns, and that basically is to get in there, do it quickly. We assess how many lots do we think we can sell in any given year based on the market demand, the supply, all of those types of things, and we say, well, this is how hard we think we can buy this block of land. And then we get in there and we've got to hit those assumptions. Otherwise, materially, we start going backwards in terms of our returns. So again, as an IRR business, and to provide a return to shareholders and being in a competitive market sense, we try to be as competitive as we can to deliver stock to market as quickly as we can. Otherwise, our returns go backwards. If you get a market increase during that period, you've done well. If you get one that goes the other way and you get your assumptions wrong, we actually have projects that we have to sell because we don't get a good return on it. So that market competition that Andrew talks about is the regulator within all of that.
So, because I would have thought, particularly in the last few years, that you would have made assumptions, and in a property boom, you would have more than covered, and probably you've had a win at the moment. But I appreciate that's not always the case. That makes a lot of sense. So, would it be true to say that if the process was quicker from when you bought the land to being approved and put out, that you could offer maybe lower margins because you don't have to factor in some fat to allow for markets changing?
Oh, I'm happy to answer that one again. We have a number of land holdings that, if they were approved and rezoned and ready to go over the last couple of years, we would have sold them all by now. I look at some of our land holdings in Illawarra, for instance. We've only just got an approval and have to work through a bulk earthworks approval. It's only 700 lots, but that'd be sold, and that would have probably taken out 700 buyers out of the market. So you look at that and probably would have moderated the demand for down in that corridor at the moment. But I look at that corridor specifically, and they had 36 sales for the last quarter in the hottest market of all time. And why is that? It's not because people are holding back. It's because there's no supply. And why is that? It's because the rezonings and the DAs aren't in place to deliver that.
Yeah, and look, there's been lots of discussions from industry groups and so forth that aren't at the coalface like you. And to be honest, I'm from private enterprise and business, so they're relying on the goodness of people to distribute some land at a lower price, 20% lower than the rest of it. And I'm thinking to myself, this is nuts. The market is the market. And, as business people, you get what you can get. And I understand that competition keeps you honest, and that's the way it's supposed to work. So it seems to me that the solution here is just make sure that you can get the land in a more timely manner, and there needs to be more of it.
Couldn't agree more.
Yeah,
support Richard's comment. We are driven. He always pays more for land than I do. I don't know how he does it, but he pays more than I do. So I'm always chasing my tail, trying to find that land.
I grew up in Kalanga across from North Lakes. I know how well I did there, so well done. Okay.
Thank you, Terry. Matt. And Matt, if you're quick, we can go back to Julie for some more questions.
Oh, okay, put the pressure on. Thanks for your evidence, guys. There appears to be an oversupply of apartments in the Sydney market. If that's the case, why haven't prices fallen?
I can't comment on that.
With that, Matt. I don't know if it's an oversupply. There are certain corridors you may find, Matt, that have got more, but it's not an oversupply generally. I'll give you some colour. We've released a number of projects in the last little while, and they have been taken up very strongly, and that's off the plan, which means that we have still got a number of years before we have to deliver those. So on that basis, we're not seeing that.
Anyone else?
Look,
I would agree. We analysed the apartment market across the country. Yes, there's pockets of oversupply in Sydney, but when you look at the broader population numbers versus the actual delivered stock across the city, then there's no oversupply at an aggregated level. And the other factor I think that's supporting prices in that market is just the absolute price gap between detached house prices and apartment prices, and that is driving demand. The affordability issue is pushing demand back into that lower price point of apartments now and supporting those prices at those levels. So even in the oversupplied pockets.
So you said that
Can I just
there's
comment on that?
oversupply.
Can I just
Yep,
comment on that, Chair? You know, just in the Brisbane market, I can't speak for Matt's market, but I know myself, having units, and I have friends who have invested in units, and most people, the councils up here, you know, released way too many units, and there was definitely a stagnation, and the prices in units dropped. But most private investors like myself and other people that I know, we've simply hung on to them and rented them out, waiting for the market to rebound. So I think the market is, again, the market determines this stuff. I don't know how much controls government can have over it. I just think we've got to get this supply right, and that'll fix the problem.
Well, you
Yeah.
both said that there's pockets of oversupply, and I've got one here in my electorate that's about 1,200 apartments completed 2 years ago. Half of them are empty. And the developers decided just to hang on to them rather than sell them at a reduced price. They're just going to wait it out. So if it is Economics 101, that would dictate that you would drop the price to clear the supply. But that's not happening. So it's not Economics 101, is it?
Can't talk to that particular developer,
Yeah.
but we would certainly be trading through as quickly as we could.
Yeah, we can't talk to that developer either, but the apartments market, in my view, is going to have a pretty strong rebound shortly, because there's been a massive under construction of apartments everywhere. And you're going to have students coming back, overseas migration, domestic travel, interstate travel, re-emergence of Airbnb. Like, it had everything that could have gone against the apartment market, probably did during that period of time. But again, people like Mirvac and key developers out there, they're getting great results in terms of their sales momentum in the apartment space. And I can't talk to the developer that you're talking to, but there's certainly, you know, it's on the precipice of really going up in our view.
I couldn't agree more, and I think from where I sit as an analyst of the apartment market across the country, we're going to see Brisbane is a great example raised before. Brisbane peaked in 2016. It's been clearing all that oversupply for quite some time, but the supply levels, I think we need in Brisbane across the greater metropolitan area somewhere between 9,000 and 12,000, where the next 4 or 5 years will build half that level. And I part of the reason is this apartment supply is a big ocean liner, and it takes so long to turn around because of the lead times. You got that approval time, then you got a marketing time, then you got a construction time. So much can change in the demand fundamentals between that conception and the planning phase and delivery. So there's always going to be a bit of a supply mismatch there. And this is one thing where build to rent residential, I think, will even that out a little bit, help even that out a little bit more. And that construction, hopefully over time, will become a little bit easier. So I certainly think that's a sector that should be encouraged. And that is one of the benefits of that sector, is leveling out that construction pipeline a little bit over time.
UNSW City Futures appeared before us a couple of weeks ago, and they'd done an analysis of planning times and taxes associated with apartment developments. So they did an analysis of 881 different residential apartment developments across quite a few capital cities across Australia. So it was quite a big study. And their study concluded that that the planning determination process, in terms of the whole of the time that it took to bring something to market was 13% of the total time taken to bring a typical multi-unit development to completion from initial land acquisition. That would appear to be a reasonable time frame. And secondly, that in terms of government taxes and charges, that they accounted for 11.3% of the total scheme cost. They appear like reasonable assumptions and findings. What's your view on those?
I'd really like to see that information and break it down into corridors and states. I would be very surprised in New South Wales if those numbers are anywhere near that, would be my comment.
Yeah. Does anyone have any other studies that would disprove that?
There was actually an apartment supply pipeline study commissioned by the UDIA, which was launched yesterday. So that talks to supply, but that's specific only to New South Wales, which shows definitely an undersupply and some timing constraints around the delivery of that. But I'm sure there's plenty of other research reports we could get our hands on.
Yeah, if you could supply those, that'd be good. In terms of the time issue, they said it takes an average of 33 weeks out of a total typical development time of 4.7 years for planning.
That must be blended across the whole of Australia.
Yeah.
Yeah, it is. And I mean, but that's what we have to look at. We're a federal parliament. We have to look at policies that cater for the whole of the country.
Matt, without seeing the report, it's important to understand whether there's a rezoning process ahead of it, because if they're discounting the rezoning process and then you get into just a development application, then that might be okay blended across all the states. But certainly, again, in New South Wales, there's no way you would get a DA in 33 weeks once you've had a rezoning, unless you're incredibly fortunate for whatever reason, and it's probably not a complex or complicated project in any regard. So if they're not considered the rezoning component is taking a long period of time. It's then can take, 33 sounds very, very low. You're talking anywhere from, 12 months is an absolute minimum, but you're then anywhere from 18 months to 2 years for your more complex sites.
And on the supply issue, what's stopping more land being released by governments, particularly for greenfield developments? I think generally, from our perspective, if you're talking about multi-storey developments, huge developments in already built up areas in cities, you're going to get opposition from local communities because they see it as a reduction in their quality of life with increased traffic congestion and all of the issues that come with big developments. So if the solution is to try and build out further, what's stopping governments releasing more of that land so that can actually occur?
Oh, you go.
Sure. I think that's not necessarily the solution to the problem we face. I think, and I understand that this is about the whole of Australia, but when you look at Sydney, the Sydney Basin alone, the land is, we cannot continue to actually develop like we've got in every green land. We actually have to have in every green site. We have to have a balance of both. We have to have the housing in the cities, and we have to have the housing on the fringes. I don't think it's one or the other. Richard, did you want to add to that?
Probably more in the greenfield context, and I know the inquiries more broadly than New South Wales, but to give a few specific examples of the New South Wales, what's holding back some of those release areas. You've got a whole Marsden Park, Northwest Schofields, Penrith release areas that are tied up with flood infrastructure and funding associated with that. So you need clear leadership, investment to make those projects happen. You look at projects down in the southwest growth areas, which are tied up with biodiversity, koalas, and a whole lot of environmental type things down there. So I think some of the areas identified for development have other constraints that actually, once they've been identified, there needs to be strong leadership and a coordination between different referral agencies and the department to take forward a unified approach to development that takes infrastructure along, that takes planning on the journey, that takes environmental, and be well considered. Because when there's a mismatch, it seems like there's no directional leadership to actually take the bull by the horns and say, guys, we've got to bring this in. We need to look at this. How do we work constructively with the industry to make it happen?
So one of you mentioned earlier that the Victorian system was better. What's different about that, say, compared to New South Wales or Queensland that makes it better?
Yeah, that was me. I think I mentioned that as well. So, and look, I have worked in the Victorian system for a period of 18 months. And when I was down, I was the regional manager looking after the north and the western corridors. And every month, well, not every month, nearly every second day, I'd get an approved 1,500 lot PSP approved site ready to go that would be brought to me by, you know, JLL or Colliers and people like that. And I'd just be going, well, I'm not doing that because I know the next one I'm going to get is a better location, and I'll do that. So the PSP process was very obvious. It showed where the next areas were going to be. At the Victorian Planning Authority actually took people on the journey. They coordinated the infrastructure delivery. They had all those types of things. And in my time when I was down in Victoria, and again, I was developing around Truganina and areas like that, there'd actually be train stations already in place, not far from where the development front is. And I went, wow, this is incredible to see an investment in infrastructure to facilitate the new edges of development within Melbourne. So it was actually a very coordinated approach. It doesn't happen all the time, but the PSP process is a very transparent, rigorous process with deadlines that said this is where it's going, this is how it's going to be delivered, and it provides certainty to the development industry. Sure, you might be competing with 10 other developments at the same time, but you're all getting in, and that competition again also suppresses the price, because if you don't buy this one, you can buy that one, or you can buy the other one. So that was my experience in the Victorian system.
I think they call that planning, Richard.
Yeah.
Okay, I think that might be the
Thanks,
comment of the day. Julie, you accused me of cutting you off earlier. Now I'm going to cut Matt off so that you can finish off in the next 8 minutes, please. And I will be true to my word. Whoever is talking at 20:15, I'm just stopping. So, you know, time yourself. Julie.
Okay, I've just got two, and then I'm happy to give back to Matt. Can I talk about safety for a bit? Obviously, in Sydney, we've got Opal Towers, but there's also, you know, talk about asbestos coming in and building materials. I walked past a property the other day that was being built, and I swear the wall was not on the slab.
Mascot Towers.
No, it wasn't actually. It was. So there's obviously a lot of concern about safety, and while we do obviously need to improve and speed up the processes, that bit really matters. So do any of you have comments on what it should look like to ensure that every builder is meeting the standards, but we're actually getting a reasonable sort of process for the developers themselves?
I'll jump in there, Rich, if you like. Sure, I think in the New South Wales context, and I apologise that I do have a New South Wales bent, that David Chandler has been organising those things better. And for a company like Mirvac, where we've got quality is basically our benchmark, it is not something that's foreign to us. It's bringing those other developers that are perhaps not as astute to safety issues up to that bar. I think getting that balance right, though, Julie, is absolutely important. At the moment, the red tape that seems to be coming out is going over the top. How do you get a pendulum to swing to the right spot rather than swinging one way or the other? So I think working with the building commissioner and getting that balance right over the next 12 months will be critical.
Thank you. Any others? Okay, I'm moving on to the next one. Can I talk about long-term planning? We've heard evidence that if the state governments and the local councils, etc., had their planning well in advance, so that you could see what was coming in terms of land release and when, and you know how long the planning process would take place, that would dramatically improve supply. But I also would like your comments on how far ahead you think Commonwealth governments and state governments should plan in terms of social housing, because they will have to build it what would a planning process look like that allowed you and the social housing guys to kind of coexist in a way that added to workforce and added to supply chains rather than competed for them? Sorry.
Toby's pausing there.
Is that are you because it's a stupid question or because it's bizarre?
In terms of, I'll address long-term planning first. Again, with the New South Wales bent on this, Greater Sydney Commission does their district plan reviews and all the like, and then local housing strategies meant to fall in below that. There's a real key focus around the 5 to 10 year horizon. Again, when we're trying to bring stuff through rezoning, the process that we have in New South Wales is it needs to be longer term view than that 10-year horizon. It should be an immediate sort of how do we accelerate housing, but where are the opportunities beyond that? So we can actually go in with some certainty and bring forward large scale applications to the Greater Sydney Commission and the department to basically say, look, here's a 5,000 lot development that you don't currently have in your housing forecast, but you've identified it as a potential investigation area. We then have the ability to fund infrastructure, studies and the like that could bring on additional housing over and above that's contemplated in that 5 to 10 year view, which I think is way too narrow. And currently that process, you can't do that in New South Wales. I get approached all the time saying from a private landowner on the edge of the growth centre boundaries saying, I could give you a site that could deliver 10,000 lots over the next 10 to 20 years. I can't even talk to the Greater Sydney Commission because of probity around, you can't talk about individual projects. I go to the department says, well, it's not in the Greater Sydney plans. But if there was an avenue or a mechanism to bring forward those opportunities from a planning perspective and take a longer view horizon, I think that is really important. In terms of the question around social housing, again, the more optics you have to what you want to provide, then the industry can adjust and flex accordingly. Because if we know that the industry can go from delivering, call it 13,500 greenfield land lots a year to 20,000, and that's where it is, Andrew can gear his building companies up. Everyone knows that there's a growth story and trajectory that isn't a one-off sugar hit type of thing. So if you know that there's a dedicated pipeline and a greater level of pipeline, then you can actually gear up over the longer term to make sure that you're not going to have these spikes of supply coming on in and out of the market. So,
thank you.
If I just provide a quick comment there, I think one of the huge success stories in New South Wales was the Hunter 2020 plan from a planning perspective. We looked at that back in, businesses growing up in that region. It provided certainty to developers, provided certainty and growth to the community. It's been a huge success. Unfortunately, there just hasn't been a replacement. A 20-year horizon for growth corridors and planning is not unrealistic. In a heartbeat, the 20 years passes very quickly, and that plan hasn't been replaced with enough stock, another supply to see us through to another 20 years, which is only going to see, demand and prices, prices rise because of over, short supply and over demand.
Thank you. Thank you.
Ladies and gentlemen, I might call it time there. I want to say thank you to all of you for coming in on such short notice, but in our last round of hearings, we had a number of questions put to us by one witness in particular, which I think was worth investigating, getting to the bottom of before our final report. So thank you for that. If you have been asked to provide any additional information, which I think Matt has asked you to provide some information around supply of apartments and tax, and also development timelines as well. Could you please do that by the 10th of December? You will be sent a copy of a transcript of your evidence and will have an opportunity to request corrections to transcription errors. I would like to thank members and witnesses for their time today and declare this hearing and the hearings of this inquiry closed. Now we get on with writing the report. So thank you very much.
Thank you.
Thank you.